Hey, how's everyone doing? This is just a quick little market review of not so much a review, but just tape reading. And we're here at the 11:30 lunch macro. So we've just retraced into the around 1040 Civi. I've been tape reading this for about an hour, and I was thinking that this market structure shift that happened at 11 was going to bring us higher into that Civi, but after we had shown resistance at that 50% of the Civi there, my attention was towards the sell side liquidity. But I was still anticipating maybe a run above where that buy side liquidity is. I just needed more confirmation because we were really just wicking here. So my line of defense was the order block at the high, the inversion fair value gap. But with us declining like this so much, my attention really was just down there. There's relative equal highs, relative equal lows down at 10:50 and 11 a.m. And we're 30 minutes already in 11 a.m. and we're already so close to it. I just wanted to see us get below this new day opening gap and act as resistance. Along with the glitch in the matrix, the black cat, there's a switch in delivery. We were in a buy program from 11 a.m. to about 11:15, and we started declining lower after getting into a premium from that 50% of that Civi. So my attention was in the sell side of the curve. So yeah, just right now, I'm hypothetically putting myself in a short position from using the order block and inversion fair value gap, because that's the only entry mechanism I could see with going short if I was going short in this time. And within the time of the lunch retracement, it's usually more times than enough is going to hit some kind of swing low or swing high. And yeah, this looks closer to that swing low found at 11:10, whoever was going long. And of course, we're just kind of stalling out. That new day opening gap is acting as a barrier. We're still in the lower portion of that inversion fair value gap. And there's perfect delivery here at the consequent encroachment. We're just getting some delivery to the downside. This was definitely a messy, not super clean, really back and forth because of PMI number coming out tomorrow. So there was low expectations, but there's still setups to be found. And it took me a while to find the setup because I was watching at around 10:30 or so, just tape reading. But this was definitely an easier setup to find, and the risk to reward on it was really awesome. It's a 4. And I'm just asking myself, if I was going long, would I feel safe right now? And I wouldn't. I'd feel like this thing is coming close and closer to me. So right now we get this nice delivery at 11:34. So they stop after taking that swing low, and they're engineering liquidity right now. So all they're doing is building up more orders for support. Retail traders are not going to look at this as support. But in my mind's eye view is I'm seeing new day opening gap, inversion fair value gap, up close candles are acting as resistance to price. So still, I like the idea of going short. We're in a sell program on the sell side of the curve of all that buy side delivery. And yeah, today was a little bit tricky. We had a huge Judas swing at the 10:30 news driver. I didn't participate. I'm just tape reading. Here we have a volume imbalance and we get perfect delivery. We hit it on the dot at the low end of that. And I love to see that. My attention still was taken to buy-side liquidity because after running that swing low, there's times where this market will just go to the opposing side, and with it being so choppy in price action, I could have expected some kind of seek and destroy. So really that was just a bread and butter, easy in and out setup. If I did put myself in that trade, I wouldn't have put much leverage on, just because of how the back and forth price action is. So, yep. And now we have a unfilled fair value gap that was used as a breakaway gap. I see that as a target as well. We completely rebalanced that busy run up there. Anytime this market takes out a swing low and doesn't close below it and creates a support structure found in relative equal lows, it will shoot up, and you just have to wait because it's a fake move, because clearly it just shot up just to go where? To the volume imbalance, and that's it. Now it's breaking down lower. So definitely have seen better days, but we can have that expectation when there's a PMI number coming out tomorrow, so they'd have a lot more volatility to the market and more participants. Regardless, it's still, you can read it. If you're on side with the market, being careful, looking at your down close candles or up close candles as support or resistance, you can get a good read on this. And using the new day opening gaps, it's such an amazing tool to use. So right now I'm just running fib deviations of where I could possibly see price wanting to take out. I really like the first standard just because there's rejection blocks and a lot of wicks down there. Price might not want to go down there. They might engineer more liquidity for sell side. But for easy bread and butter setup, you just want to aim for these swing lows within the time of where you're at in the market. Here we go. We have another drop down here. And look at the delivery of that candle right now. It's at the high of the new day opening gap, which is nice. Just using it as resistance. The algorithm is tagging along to that price level. And yeah, I'm really liking this model within the lunch retracement. It's really starting to become easier and easier to see of just where price is going, especially within this retracement and just the decline. The dead giveaway was clearly these busies not showing support. They were just falling through, acting as stepping stones for price to want to go lower. A lot of wicks. All right, thank you. Hope you all find this insightful.